Hello and welcome to ByteTree's end of 2025 Postbox, where Charlie's going to answer all of your questions and comments that we've received in recent surveys. Those were all submitted anonymously, so we couldn't reply in person, but we've bundled them all together here and are going to cover everything that you've been saying and asking. So thank you very much for responding to those. The first thing to say is this is not investment advice. Nothing should be taken as a recommendation. This is a discussion. And we're going to cover roughly four sections: the multi-asset investor, quality, general questions, and then venture and global trends as well. And Charlie will even talk a bit about the role of precious metals in the portfolio after their incredible rally, how things are looking for 2026, and reflecting a little bit on the year. So welcome, Charlie.
Nice to be here, Kit.
Brilliant. Well, we'll get straight into it. Someone's written in and they've said, I've recently taken control of my SIPP, my pension, from an independent financial advisor, and I'm gradually spreading it across the various services. I'm fairly time poor, so while I've been reading the multi-asset, quality, and venture output, I've not yet taken all of the other content on board. A steer would be great as to how I should spread myself across everything would be really helpful.
It's a very good question. There are lots of services, and some people say there are too many. I think there are too few. There's so much you can do in the investment world, but I'm very happy with what we've got here and now. And I think that clients should be looking at the services that are appropriate for them and not reading all the other stuff if it's inappropriate. So have a look around, decide what works for you, and embrace it. I would say that the multi-asset investor is my product that's nearly 10 years old, 10 years old in the end of January, obviously coming from the Fleet Street letter. And that's a balanced portfolio put against an equity portfolio. And so how would you encompass other portfolios with that? Well, if you wanted to engage with quality, that would make sense. You'd put that in the middle. You might take a little bit of weight out of soda. So it's more risky than soda, but less risky than whiskey. And then take a little bit more weight out of whiskey. So maybe if you were 60-40 of soda to whiskey, maybe you'd go to 55 soda, 20 quality, and then 35 in whiskey. Something like that. If you wanted to go with venture, you'd probably take that entirely from whiskey. And do that. And again, in venture, which is not a portfolio, take the ideas that you like. I mean, don't buy everything. We're gonna try and put out an idea a week if we can find something we like. But that's not an objective. We have to like it. And so there might be too many of those. So and then the AA as well. I mean, so where's that on the risk front? It's probably quite similar to quality, probably slightly riskier because it's index funds rather than high quality stocks. So in a severe downturn, that will probably go down in a similar way to the market. But again, slotted in between soda and whiskey, I would think, if the AAA is something that appeals to you. And of course, that's just for high conviction index funds.
Yeah, indeed. And in terms of how to fit them all together, obviously every single service, as you say, is a lot, but that's why the Pro bundle, I think, is £99 a month compared to if you paid for it all individually, it'd be sort of £231. So two-thirds off. So if there's a couple of services that don't interest you so much or you don't get so much value off, we're hopeful that the sort of the big discount covers the fact that it's too much for one person to consume outside of their normal job. Someone's written in and they've said, your service is one of the many resources that I use for information, but it's by far the best and most comprehensive thing I use. The thinking and overall strategy has been so reliable and consistent that it makes it much easier to learn from. So thank you very much to whoever sent that in. The next question comes from, I guess, again, that question of the role of, I guess, the quality style of investing on its own versus within a multi-asset framework. So what the overlap is between quality in the multi-asset investment and as the quality strategy on its own.
Well, let's refresh there. Soda's a balanced portfolio, which basically means 60% in equities and 40% in bonds, as an idea. When we don't do that, but that's the idea of what you're trying to beat. And in that product, we've got basically collective investment schemes, either mainly investment trusts, some ETFs, and occasionally an open-ended fund doing the equity. So it's diversified. So if something goes wrong, it goes wrong slowly rather than quickly because they're diversified vehicles. And the turnover is much lower, and So it's a very simple thing for people to follow. The solar portfolio is really easy for someone to who's very busy in their life to do, and it's fine. But if you want more return, you need the other services, which require more activity. And firstly, you've got quality. There'll be some activity as we build the portfolio, but it won't be a massively active portfolio in the future. The objective of 24 for quality stocks is to beat the world index and to have, slightly dull bull markets, but very, very resilient bear markets. And so if that appeals to you, but yet to outperform over the long term, that's, if we've done a good job, that's what it will look like. Whiskey is a high risk portfolio with more turnover. It's not the world's best companies. It's undervalued companies, good companies which are undervalued, and we try and buy them low and sell them high. And whiskey, if it's doing its job correctly, should be beating the quality portfolio, but it requires more effort from the clients because they've got to make the trades. Sometimes that can be quite busy, sometimes that can be calm. That's very much market dependent. And then venture's the one that's, even riskier, and we'll try and have an idea weekly or so, or, when they come to us. But anything goes, far away countries and more volatile stocks and that sort of thing. And it's a very exciting thing to cover for us. I mean, the whiskey and venture are really good fund portfolios for us to create. But I think that they're not for everyone. They are the add-on. But you've got the full spectrum. Starting with soda, venture and AAA, and then working up to the higher risk ones. And of course, there's crypto as well, portfolio, which is crazy, crazy. But that's 1 or 2% weight if you're going to put it all together. So I think that having that broad spectrum of services should have something for everyone. But it's really, we do leave it to the clients. We're not independent financial advisors, so we don't tell clients how they should put them together. That's something they got to figure out. And what I would say that, once you figure that out, and it really comes from within, it's, what you do for a living, how much time you've got, how interested you are, whether you want to be very active or less active, and that sort of thing, then turn the rest off. So it's a very simple idea. What works for you, do it, and make sure you keep us on our toes.
Yeah, indeed. I mean, investment is one of those super personal things. Some people like skydiving and jumping off bridges, and they're more going to lean towards venture and the crypto stuff. Whereas if you're steady Eddie, no risk, not too dangerous in your hobbies, I guess you prefer the low turnover, the quality things you can trust, 20-year things. So think about your own personality, what investment styles suit you, and yeah, invest accordingly through the services is what I would say. Another question on quality that's come in is they say quality is a great addition, although I find that there is too much information provided for each investment opportunity, and I rarely have the time to read it all. Perhaps a little less detail could improve it. All I would say to that is we have the investment case written in brief at the top of every note so that you can skim through in a short note. If you already trust Charlie, if you trust the portfolio allocation and the strategy, you get the core of the investment thesis up top. But at the same time, the super long investment thesis that we do, the deep dives, is because if you're going to invest in something for 10, 20 years, which is what we're trying to do in quality, you want to really know the business model, really understand the competitive advantage, really get your head around, I guess, the strategy and the competitive environment it operates in to increase that level of certainty that this really is the very best company that we could be investing in and also at the very best time. So there's that balance. There's a short note for people who want the short note, and there's the depth because the depth is necessary for the investment strategy. So that's how I put those two things together. But is that how you see it, Charlie?
I do, and I think that there's, in this business, trust is everything, and anyone who's been a client for a long time has started to trust us, knowing that we do the right thing. We do make mistakes, of course, but then we try and fess up to them quickly and reverse course, and things can go wrong in the investment business, unfortunately. But the key is that if you trust the ByteTree process, then the short note will do. But if you're an investment geek, the long note's interesting. And okay, if it's medical, then it can be quite hard going. But if it's on chocolate, it's quite fun. And also, I'd present the Range Rover in Chelsea thesis, which is if you live in Chelsea, you don't need a Range Rover, but it's nice to have. And it's the same with a very, very long note. Knowing that we've written it and looked at it in detail should give people comfort. You don't need four-wheel drive in Chelsea, but but hey, they all seem to have it.
Indeed. We've talked about the multi-asset and the quality portfolios. Someone's asking whether venture could ever work as a portfolio, whether we could frame it like that, or maybe just how that's set up differently in your head.
Yeah, it's a service rather than a portfolio. A portfolio thinks about asset allocation, it thinks about weights. For example, if I was trying to maximize the risk in whiskey, I wouldn't have the money map implemented, which is trying to diversify in case the situation changes. If the macro situation changes for interest rates, inflation, the whiskey portfolio is quite well balanced for that, and that's why it does such a good job over the long term in terms of risk metrics, not just return. But the venture's not really too worried about that. We're just looking for stuff that's going up here and now and hopefully has the potential to do very well. And it's a sort of survival portfolio. So the ones that keep doing well stay in, and the ones that start to fall by the wayside get kicked out. So it's a very sort of concentrated, high return environment, and it doesn't really focus on diversification or portfolio construction anyway. So it's a tip sheet, it's a list of ideas. I don't expect everyone the venture clients to buy all the stocks. I hope they disagree with some of them and say, "What are you thinking on that one?" But to go with some of them that appeal to them. Nevertheless, the way it works, all of these services that we provide, at the heart of it is our investment process, which is the global trends. So, by publishing that, we've opened up a large amount of our process, and there's other screens that we add, which are to do with company fundamentals and valuations, and balance sheet things, and lots and lots of things which we haven't opened up. Um, and we can look at that and we can say, okay, these stocks are suitable for venture, these stocks are suitable for whiskey, these stocks are suitable for quality, and repeat, rinse, repeat, 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 and that's what we do.
Perfect. Um, the next person who's written in said, ByteTree has been a game changer for my investment journey. Keep up the good work. So thank you very much to them. Um, and the next question, yeah, so we had a few come in on a similar theme, so I'll just read out a few quotes. Overall, I'm delighted with the content provided and the continued innovation to develop new products and strategies. I myself need to put a bit more time into the ByteTree Global Trend System to get the very obvious benefits of this data set. The next person says, I just don't have time to absorb it all. And the third says, I'd like to make more use of GTI, but have too much else going on at present. I hope to spend more time studying it in the future. Time clearly a factor for some people with the global trends data set, and we understand that.
If you're a brain surgeon, please focus on your patient and leave the answers to us. I think that's one way to look at it. If you're retired and you've got time on your hands and you're an investment geek, take it all in. But it's there. A bit like the long quality note, you don't need to read it. If you think that Nestle is a good idea, then just buy it because we've looked at it carefully and we can demonstrate how we've done that. And the GTI process in the background demonstrates how we operate, what we do, why we're trying to be on the right side of history, 90% of the time. And then if we're not, we diversify. So, we hopefully know what we're doing and repeat that process. So, I think that we can be used as a time-saving device for those who have been with us long enough to trust us. And I'm very, warmed by those who do and who say they do. But yeah, if there's too much, turn it off.
Yeah, on global trends, I mean, I would say, firstly, if you do have the time, it is worth getting into the data and getting your head around it. It's something that was completely new to me at the start of this year before I joined ByteTree, but has been immensely valuable learning through the building of that system with you. And in terms of, where we put the answers go into venture. Venture is where the ideas from the global trends data set come out. And so that is if you want the answers and don't want to have to spend the time, that's where they go. The next person said, more webinars, please. So we did one 2 days ago on the global trends system. So go and have a look at that. And there's this one that you're watching right now. And as Charlie would love to point out, I am tasked with making sure there are more next year. So hopefully more video content with Charlie, more of his time for you. Another person has asked about an income portfolio, whether that's something we're considering launching or building in any sense. I would say quality is a phenomenal way to invest for income. These are brilliant companies with 100-year histories of growing their dividends every year or nearly every single year. so far, because we have a value bias as well within the service and the portfolio, we are getting, I think, a sort of average 4% dividend yield on the companies we've recommended so far. So the yield is healthy and we expect it to grow because these are brilliant companies with very long-term growth prospects ahead of them. So that would be all I would say, Charlie.
Yeah, I mean, I think the test that the ultimate success of a quality stock is somewhat how it behaves and everything, but the fact that it can sustainably grow its dividend for the long term. That's kind of the test. And most companies, cyclical companies, they grow their dividend and they cut it when something goes wrong, and then they grow it again and then they cut it. But the quality companies show this extraordinary consistency to grow it through thick and thin, and so that's what we're looking for there. But I suppose one downside of that is that of quality stocks is that you don't tend to get the income up front. I mean, the yield is never particularly exciting compared to higher income stocks, and so you do have to get on the quality train and look forward to income growth in the future. Now, the other way to do income, I mean, I'm a total return guy, really, which means mixing all different things around and not really differentiating between capital and income in terms of return. So it doesn't really matter how it comes in my eyes. The whiskey portfolio has actually got quite a lot of income at the moment, but it doesn't have to. That changes. I don't see that as important. And so if a cheap stock comes along with a decent dividend, great. But that's not why it was bought. And there'll be times when the portfolio, the whiskey portfolio has a low income. And of course, venture has no income mandate, nor does AAA. So yeah, we are very much a total return house with the exception of the quality portfolio. We have toyed with the idea and are investigating the idea of some sort of quality income portfolio. And the issue is that if you primarily look for income and search for yield, often that can come at the expense of capital. And so it's not as risk-free as it sounds. There's this idea out there that income stocks are safe. It's not really true. But you definitely can build a good income portfolio. And there are some good income funds out there. Man GLG UK Income, for example, or Troy Global Income. I mean, these are good. But that's not all we do. And I think that they will have lower total returns than our portfolios, but they will give you an income.
Everything is a trade-off. Someone else has asked, is ByteTree for UK investors only, or can anyone use the services?
We're globalists. We love the world. We love people. But some of our services, it doesn't matter who you are, where you're from. For example, venture, AAA, quality, portfolio. These things are just investments. Atlas Pulse, gold doesn't matter if you own gold, whether you're Japanese or British. But the soda portfolio is, the fixed income portion is GBP denominated, but the rest of it gold and the funds, they're equities basically. So it doesn't really matter. But yeah, we'd like to be more international, not just in our investing, but also in our client base. And I think we're slowly moving that way. But yeah, the multi-asset investor is the most UK focused product. Everything else is probably got a straightforward global appeal. And it shouldn't matter what nationality you are or which currency you're denominated in. But yeah, we do report most things in GBP. I think Portfolio we do in dollars for some reason, but it would be odd to do crypto in pounds, wouldn't it? I don't think anyone does that.
Yeah. Obviously, there's no technical limitations. You can subscribe to the services from anywhere in the world. But yeah, that's a good way to think about it. Speaking of the website, someone has asked why can't they pick and mix different services, so add them together in their own combinations?
Yes, well, we have an IT limitation. It's surprisingly difficult to build the shopping basket approach like you do at Amazon, where you put your things in your basket. And if you spend enough money, you get free shipping. And if you spend loads more, maybe even get a discount or something. It would be nice to have that, but we haven't got it. And it's seriously complex IT project to build that. And we've learned the hard way that that's not something we want to do. And so it's much cheaper and simpler and more resilient to take something off the shelf that worked really well. The Ghost system that we have is brilliant. And the simplicity is what makes the whole thing work so well. Some people write in saying that this doesn't work or that doesn't work, but it's not nearly as much as it could be. there's quite a low failure rate in terms of our system. So I think it's really robust. And we just do packages. And the most popular package is TMI and Quality. And of course, the other one is Pro, which you get everything. And both of them are discounted. I think TMI and Quality is £10 off, so it's what would be £58 is £49. There's a small discount there. And on the Pro package, what is, I think you said it's 231 quid for everything, and you get everything for 99. So there's a huge discount in there of what, 60 something percent. And so that allows for the fact that not everyone wants everything, but the things you want are in there. Yeah. So it's you know, I think you have to compromise, or else you get into IT hell. And if we offered every combination and permutation of package, no one would understand our website. So we just keep it simple. And so ByteTree.com is basically, multi-asset investor, Atlas Pulse, which is free, and venture and quality, just those products. And then because we are building more products, we put them onto a different website so as not to overly confuse. And that's everything to do with trend following, which is the global trends, the data set, and the AA report. And we'll do that again. So as we start building things out, we will keep it into small chunks, so the whole thing becomes manageable.
Perfect. Finally, someone's written in and said, after the sort of amazing rally of 2025 for gold, how do you see its role in our portfolios, precious metals and friends, as you would call them? Yeah, following that rally, how's it looking from here?
Yeah, so gold's stalled since October, and this is just before Christmas, so I don't know what happens between now and then. Anything can happen. Um, it's very strong. I mean, I'm expecting gold to carry on for the next few years. I'd be disappointed if gold does too much too soon, because I would much rather this was a lasting, steady bull market than one that's all over in a heartbeat like 1979 and then or 2011, then we have to wait another decade for it to kick off again. I love having gold as part of the portfolio and its offspring. Silver's now just over fair value, finally caught up for the first time in quite a long time. And so that's really on a tear right now. So positions have been reduced because the risks have increased in terms of volatility. But this could be the best bit. But we did buy silver in 2019 at, I don't know, $15 or something. And it's now in the mid 60s. So we've already made loads, and it carries on for a bit longer. But I suppose I'm probably one of the few people that would rather gold slows down a bit and just does the steady thing, and rather than goes to the moon in a heartbeat.
Right. Well, we've got one final bit of positive feedback. Someone said, the more I use the service, the more I appreciate it. I joined for the multi-asset investor, venture, and quality, and I'm increasingly liking global trends, and I'm starting to read about crypto and tokens and intend to use Pro to understand all of that much better. Thank you to that final reviewer.
That's amazing. It's amazing. So he's come in and just, crawled around all the services, and the Bytefolio service is the least popular. For the very simple reason there hasn't been a decent bull market in crypto for a while, but I think it will come back at some point and then it'll become popular again. But I love the fact that he's reading up on all this stuff. I mean, on a note on that, I mean there are tens of thousands of nonsense crypto tokens out there with silly names and things. But there's, 24 serious companies, let's call them companies, that have come through this new digital world. And it's an exciting space. I mean, it keeps me young just looking at all this stuff. And it's pretty fascinating. I mean, whilst I'm probably expert level on Bitcoin, the other stuff, I drop off. So as we go down the list, I become an amateur quite quickly. And staying on top of it it moves so quickly.
It does indeed.
This does.
Well, thank you to everyone who's given reviews like that one. Very kind, both directly to us and publicly on Trustpilot. We appreciate it personally, and it's also very useful as well. So thank you. Thanks for responding to the surveys, as I said, anonymously. Those are very helpful for us in terms of offering better services. We did the broker survey earlier this year in terms of what brokers offer the best cost, the best ease of transactions, the best international exposure, those kind of things. So hopefully it's helpful for all the clients when we do those. Charlie, finally, congratulations on a very strong year in the multi-asset investor. How are you feeling, and how are you feeling for 2026?
We never celebrate investment performance. It's a strict rule, Kit. You never ever celebrate investment performance. So I won't answer that. But thank you for the sentiment. But it's not something we do. I've learned the hard way over the years. Well, we always look to the future in this business and keep going and just look over your shoulder all the time because things are, the markets can be horrendous and they can change at any time. And so being a bit of a pessimist, I think, is quite important if you want to manage risk in your portfolios. So there's that. But it has been a really fun year, and there's been lots going on. And at ByteTree particularly, launching Quality, which I'm really pleased with how it's going, halfway there. And I'm really pleased with how Global Trends has evolved as well. That's also a very exciting project for next year. But the other thing that happened at ByteTree was you joined, Kit. And so you've now been for a year, and that's been a great addition to the team. And how are you finding it?
Well, yeah, I guess as all clients watching this probably already know, I joined in March, and getting to spend every minute of my professional life working with you, learning from you, is a huge privilege. And the learning curve has steepened sharply. So it's a CAP R5 using the global trend system, my learning curve. And yeah, I've loved every minute building out global trends with you, working on Quality, which is really my preferred investment style and something that I just believe in wholeheartedly. Have loved diving into those companies, understanding those business models. Every time I fly now, I see a Smith's Group airport scanner, saffron on the planes. Love, every single corner of the companies we're investing in is visible in my daily life, and that's a really enjoyable thing as well. So,
And, and
yeah,
you walk past a WH Smithers at the airport as well, don't you?
yeah, sure
That,
do. And
that didn't work out too well this year, did it?
no, among a few things, but yes.
And
And
it was deemed a quality stock pre-2020. That's the amazing thing.
yes, well, the definition of quality is something we debate very regularly. It's seen all over the market as, a lot of quality funds and quality biases in every manager's strategy, but we question to what extent that really is true in terms of the resilience they offer, the defensiveness they offer in difficult markets. So, yeah, most excited to be building out the rest of that portfolio as we head into spring and seeing how it performs for the years to come.
Yeah, I mean, before we end, on that note, when I buy a whiskey stock or a venture stock, provided the investment case is sound, like the momentum looks okay and it stopped falling and it's cheap and there's some positives around it and a bit of a positive statement somewhere, something to cling on to, better outlook, or it's commodity related and you can see that price rising or something like that. Pretty flexible in and how you define that. But it's not the end of the world if it doesn't work. So if in 6 months' time we haven't made any money or we've lost 20%, you just say, sorry, clients, let's move on. But in quality, we're trying to make a decision for a very long time, and so you have to look much deeper. And I think that's certainly a new thing for me, which is something I've enjoyed very much as well. Really having to look over the hill, as they used to say in the Royal Artillery.
Very good. Well, thank you everyone very much for watching. Hope you've gotten some use out of these answers, out of these opinions. We've got the quarterly review coming early in January, so keep an eye out for that. That'll do a fuller discussion, I guess, of the last 3 months of what's been happening in global markets and our portfolios. Otherwise, just to say, yeah, thank you again. Happy New Year to you, Charlie, and to everyone watching at home. And we can't wait to continue the work next year.
Bye bye, everyone. Thanks, Kit.